Good morning again. Thank you very much for joining us on this very rainy Geneva morning. I would like to welcome you this morning to the United Nations Development Programme, UNDP, and the Microinsurance Network, MIN, event on bridging gaps, building futures, where we will launch the Microinsurance Landscape Report, the 2023 edition. Also acknowledging and welcoming those online. Thank you for joining us, and hello from Geneva. My name is Shamiso Rigidzo, Partnership Specialist at UNDP's Insurance and Risk Finance Facility, and I'll be your MC this morning. Acknowledging the ambassadors present, we're very honored to have you here this morning. Ambassadors from Luxembourg, Nigeria, the Gambia, Togo, Djibouti, and Thailand. Thank you for joining us. Today we have a very rich program. We are up for a very interesting discussion that will highlight how insurance is contributing to the development and promotion of financial health of families, micro and small businesses, communities, and nations in the face of growing uncertainties. We will hear from public and private partners in insurance on the types of solutions and collaborations needed in the future. To start us off this morning, we're going to switch to a live address from UNDP's administrator, Mr. Akeem Steiner. Thank you.
Excellencies, ladies and gentlemen, it is a pleasure to join this timely event hosted by the Microinsurance Network and the United Nations Development Programme, UNDP. We are seeing how climate change is adding a major burden to the public budgeting of high-income countries, but many of them have the means and finances to adapt, protecting jobs, homes, and infrastructure. This latest Landscape of Microinsurance report shows that for almost 9 out of 10 people in low-income countries, the financial safety net provided by insurance remains effectively out of reach. That means that smallholder farmers, micro-entrepreneurs, or those working in the informal sector are often left high and dry when a climate change-induced disaster strikes. A lack of financial resilience in the face of crisis can set back lives and livelihoods for years, as people simply do not have the capacity to recover and rebuild. It is now vital to get ahead of the crisis curve and provide communities with the buffer they need. In this respect, insurance serves as an essential stabilizing force for hard-won development gains in the face of uncertainty. As climate change tightens its grip, how then can we develop insurance and risk finance products that are accessible, affordable, and tailored to the needs of communities in developing countries? To do so, insurers and governments need quality data and market intelligence. This represents the unique value added of this report. It not only brings a range of new data to light, including the fact that the microinsurance market saw a 12% growth in the year 2022. But it also underlines the acute need for governments to design policies that incentivize the generation of data to help inform the development and pricing of accessible insurance products. For instance, India and Colombia have made data on premiums for microinsurance products publicly available. Data accessibility will also be vital to ensure that future iterations of this report can present a clearer picture to insurers for purposes of risk modeling and product design. The report's insights can also help to drive innovation in the microinsurance sector. For example, that includes technology that can enable more efficient and scalable processes such as automated claims payouts. Or consider companies that are leveraging artificial intelligence and blockchain to lower the costs of insurance for smallholder farmers on the continent of Africa. Ultimately, all of these efforts are vital to building financial resilience, allowing families to invest with more certainty in the future with the knowledge that their critical assets are better protected. This analysis will also inform the work of UNDP's Insurance and Risk Finance Facility. Now active in 34 countries, the facility is also home to the world's largest public-private insurance partnership, the Tripartite Agreement. This partnership, which is supported by the Federal Republic of Germany, is working alongside 20 of the world's leading insurers. It aims to provide some 64 million people globally with protection from rising climate-related hazards and shocks. Excellencies, ladies and gentlemen, the facts are irrefutable. Insurance and risk financing saves lives, drives growth, and builds more resilient economies, accelerating progress across the global goals. Indeed, for many people across the world, climate change will be determining their futures as well. By extending health, business, life, and agriculture insurance solutions to some of the world's most vulnerable communities, we can help to ensure that they have a better future to look forward to. Thank you.
And with that, yes, we can clap. And with that, we will now get into our keynote addresses. I would like to invite to the panel, to the podium, His Excellency Ambassador Mark Wischler, Ambassador to Luxembourg, based here in Geneva. Thank you.
Good morning, everybody. Excellencies, dear Administrator back in New York, ladies and gentlemen, let me first thank the organizers, the Microinsurance Network and UNDP, for inviting me to speak today at today's launch of the 2023 report on the landscape of microinsurance. It is indeed a privilege and a real pleasure also for me to address you on behalf of the government of Luxembourg. Maybe if you allow me, I would like to start with a rather bold statement, and that goes this way. There is no sustainable development without sustainable financing for development. And inclusive finance, and more specifically inclusive insurance, are part and parcel of the toolbox of sustainable financing as we understand it. They provide the right kind of financing at specific moments of economic, social, and environmental development of a given community or of a country, and as such, they are playing an important role in building resilience of developing countries and of their populations, as well as of micro, small, and medium-sized businesses, which after all are the backbone of developing economies. Luxembourg is proud of its commitment to inclusive finance as one of the vectors of its international development cooperation. Its objective is to contribute to the eradication of extreme poverty and to boost the sustainable economic, social, and environmental development of vulnerable populations. Since 2009, our country is dedicating 1% of its gross national income to official development assistance. In doing so, we figure among the members of one of the smallest clubs in the world. It's the club of those rare developed countries who abide by their internationally agreed obligations to provide at least 0.7% of their gross national income to official development assistance, and new members would indeed be very welcome. As you may know, Luxembourg is the home to a thriving international center, and over the past 3 decades, we have mustered the expertise, the know-how, and the experience of our banking, insurance, and investment fund industry at the service of the development and the deployment of effective, inclusive financial tools for the benefit of our partners in the developing world, thereby fostering, as the administrator said, responsible, inclusive economic growth. This proactive approach to innovative development financing has nurtured a vibrant ecosystem where the private sector, NGOs, international organizations, and the public sector work hand in hand to advance inclusive finance. And at the heart of this ecosystem lies the House of Microfinance in Luxembourg, home to the Microinsurance Network and of numerous other inclusive finance-related entities. Luxembourg also prides itself to be a pioneer in sustainable finance, hosting a large number of commercial impact investment funds and insurers. More recently, we are also witnessing a stronger interaction with the fintech sector, such as the Luxembourg House of Financial Technologies Catapult programs, who are advancing inclusive finance fintechs. One of the alumni of this effort, the Ibiza network, provides, for example, a solution to lower the cost of insurance coverage for smallholder farmers in developing countries. Since its establishment, the microinsurance network has come a long way. Luxembourg, as its host country, is pleased to see its transformation into a truly international organization of experts driving financial inclusion in the insurance sector. Today, in the face of conflicts, climate change, and economic insecurity, which disproportionately impact low-income populations, the beneficial potential of inclusive insurance has never been more evident. As we confront these challenges, reliable data become paramount for informing effective public policy and developing affordable insurance products tailored to the needs of vulnerable communities. The Microinsurance Landscape Report exactly serves as a crucial tool in this endeavor, offering insights into the development and the trends of the inclusive insurance sector. It provides valuable market intelligence, allowing for cross-country comparison and progress tracking over time, shedding light on both existing gaps and on the progress that we have made to close them. This work facilitates engagement with the insurance ecosystem, driving market development focused on customer-centric solutions. Luxembourg remains firmly dedicated to supporting initiatives promoting the financial resilience and helping achieve the Sustainable Development Goals. Through partnerships, innovation, and collaboration, we can unlock new opportunities and create a more equitable and prosperous future for all. Ladies and gentlemen, I'm looking forward to the insightful discussions that lie ahead today. The diverse perspectives from practitioners to regulators will contribute to our collective understanding of the challenges and the opportunities in inclusive insurance. I'm confident that our discussions will yield valuable insights and pave the way for meaningful action. Together, let us reaffirm our commitment to building more resilient communities and delivering financial resilience for the generations to come. Thank you very much for your attention.
Thank you, Ambassador. And thank you for highlighting the key role of sustainable finance in building resilience. I would like to bring forward the next key address. His Excellency, Mr. Adiobun Richards Adiojon, Ambassador and Permanent Representative of the Permanent Mission of the Federal Republic of Nigeria.
Thank you, and a pleasant morning to everyone. Good morning. Permit me to seize this opportunity to express due appreciation to the UNDP office here in Geneva through the boss. Well, I don't know whether you like me to call you that, but the boss. And for this very wonderful invitation to participate at this high-level event. May I also express due gratitude to the Microfinance Network for including Nigeria, my country, in their landscape report. For us, this report tracks reports on the microfinance landscape and trends within the country. And I was discussing earlier this morning, and I could tell that the main business, so it facilitates a better understanding of this sector. And perhaps these are potentials, you know, as they say in physics, these are energy at rest. So let us do something to make them become kinetic. As we all know, microinsurance is crucial for the accelerated attainment of the SDGs, as they have the potential to deliver economic and social benefits which are aligned to the goals, particularly with respect to strengthening household and business resilience, as well as in facilitating capital flow in low-income communities. Excellencies, ladies and gentlemen, the theme of this event is so apt and, for me, timely. We are all living witnesses to the setbacks, the minor setbacks of the pandemic, and this has proven that the unexpected financial shocks could set back development progress if not properly addressed. And it's also wonderful that now we're all waking up. After all, the WHO is working on a pandemic treaty. I hope they succeed. I just came back from Addis Ababa yesterday, where we all had, we went to have, to try and get an African common position with respect to the ongoing negotiation. However, we believe insurance, even at the micro platform, as a risk protection mechanism, plays a very important and key role in the, well, I listed the part of the SDG goals. Maybe I could see 9. I could see goal 1 on poverty. I could see goal 2 on zero hunger. I could see goal 3, for good health and well-being. Goal 5, gender equality, which is for us necessary and key. So decent work and economic growth, SDG 8, but I was also saying earlier that we talking about decent work, and yesterday was supposed to be International Labour Day, and ILO worked. I don't understand. So, but then we could also talk about infrastructure and reduced inequalities, SDG 10. We talk about SDG 13, climate change, and then partnerships for all SDG goals, as in goal 17. As one of the world's largest investors, the insurance sector boldly holds that potential for boosting the SDGs. Thus, I believe that inclusive insurance policies should be further aligned with national and international SDG targets and realities. And the work of UNDP for us in Lagos State, we talked about it this morning, Lagos State being the smallest state in Nigeria, but with the largest population. And it holds, and I've heard it repeatedly said that if Lagos State were to be a country in Africa, it would be the 5th or 6th largest economy in Africa. So it is good, it's a good thing that we're starting something, at that level. So I would also like to highlight quickly the tripartite agreement with respect to the German government and the Insurance Development Forum, the IDF. These efforts are highly commendable. So they recently launched a flood risk insurance project to cover citizens against urban floods. Now, anyone that knows Lagos, he said, yes, that is an urban. So that's a very small territory. I think in terms of square kilometers should be around 1,500, thereabout, 1,600. But where you have a population of over 20 million people. So that's quite enormous. So, and we believe through this project, the first kickoff workshop being in Lagos, so that for us is something that could be latched on to further the agenda. So flooding is a major risk for many states across my country, and inflicting substantial social economic consequences, particularly for the poor and the vulnerable urban population, stretching the response capacity of local authorities for flood victims. I always joke with some colleagues that Lagos in Nigeria is just an hour drive from my hometown. I do say that I don't want these people, invading us. So let us do something about their future. But I mean well, because I know what their health and well-being also will resonate in terms of impacting on my country. The coastal city of Lagos is particularly affected by annual floods. And these floods exacerbate socio-economic shocks for 63% of the Nigerian population. living in multi-dimensional poverty, of which 4 million reside in Lagos State. So 4 million in multi-dimensional poverty. Can you just imagine that figure within a country? So 4 million, and that's no small joke. The entire population of Switzerland is 9 million. So just think back and then try and equate that to what we ought to do and we need to do to address such issues. So insurance, which for us, and I believe for everyone, transfers a portion of risk to the private sector, is one instrument that could help to spread and facilitate the cost of flood risk and improve the resilience of the impacted populations. And in this context, I would also like to endorse the microinsurance network call to action for increased participation from insurers to provide tailored products that are aimed at bolstering the financial resilience of communities. Excellencies, dear friends, ladies and gentlemen, I believe at the end of this meeting, we would all come to the conclusion that unfettered access to insurance services by a broad spectrum of any country's population will accelerate the pace of attaining the SDG goals. So this being a viable pathway to attaining those goals, particularly SDG 8, as I highlighted at the beginning, has provided the impetus for my country to strengthen collaboration with its development partners. And as I conclude, I wish to also seize this opportunity to commend the UNDP for their unwavering commitment and collaboration with other industry partners to development activities. And this has been demonstrated variously through a number of impact-driven initiatives in my country and other development economies across the world. I look forward to a very insightful discussions, especially from distinguished panels we'll be having today on how developing countries such as mine and others could best cultivate a conducive environment to fortify financial resilience of vulnerable communities. I thank you all for your attention.
Thank you, Ambassador. And thank you for highlighting key points on the role of SDGs, especially with insurance penetration around the globe. I would like to announce the next key address. Her Excellency, Ms. Usana Benanda, Ambassador, Permanent Representative of Thailand to the United Nations Office in Geneva. Thank you.
Yes, thank you, and very good morning to everyone, Excellencies, and Mr. Achim Steiner, the Administrator of the UNDP. Ladies and gentlemen, it is my pleasure to participate in this meeting today to launch the UNDP Landscape of Microinsurance 2023. As we all well aware, the world is currently facing multiple challenges, including geopolitical uncertainties, climate change, natural disaster, and the pandemics. This fast-changing global landscape is leading to a more interconnected and complex risk, affecting the international efforts to achieve the SDG. So insurance as a risk management mechanism plays an important role in addressing environmental, social, and governance challenges by identifying, assessing, managing, and monitoring risks and opportunities. As such, insurance has contributed to the attainment of the SDGs. As His Excellency, the Ambassador of Nigeria clearly mentioned, insurance only appears under the target under SDG Goal 8, decent work and economic growth, but actually it plays a key role in advancing various goals. For example, no poverty, zero hunger, good health and well-being, quality education, as well as industry, innovation, and infrastructure. However, in developing countries, only 3 to 7% of people with low and middle income have insurance coverage. In the case of my country, Thailand, we are cited in the World Bank's Climate Risk Country Profile and the German Watch Global Climate Risk Report as one of the world's top 10 countries affected by flood and weather-related loss events. If we do not adapt, it is projected that climate change may cause our GDP to decline more than 40% by the year 2050. So to manage that, the disaster risk, the Thai government enacted the Disaster Prevention and Mitigation Act, which set out a framework for disaster risk management and disaster response. The Fiscal Policy Office is also tasked to be responsible for fiscal risk management, including analyzing the impacts of natural disaster on the Thai economy and the government fiscal balance, tracking fiscal early warning system, and estimating foregone revenues from disasters. But that is not enough. The whole of society approach is required to synergize the expertise and tools of both the public and private sectors, particularly the insurance industry, to provide solutions to mitigate the impact of risk on the vulnerable people and safeguard Thailand's progress towards the SDG. We still have challenges in terms of inclusivity. According to the SDG move and UN UNDP statistic, in the year 2020, the insurance penetration rate in Thailand was only 5.3%, which is much lower than the global average of 7.4%. Affordable insurance products for the poor and vulnerable groups represents less than 1% of the overall insurance policies. In addition, these microinsurance products have mostly been sold on seasonally, mainly to coincide with the holiday events such as New Year or Songkran Festival, when the occurrence of accidents is high. Therefore, insurance industry in Thailand still has much room to grow, be they in microinsurance, crop insurance, disaster risk financing, as well as financial risk protection for informal workers. We are pleased that the microinsurance network has included Thailand in the Landscape report, which tracks and reports on the microinsurance landscape and trends within the country, facilitating better understanding of the sector. Moreover, we also need stronger partnership and collaboration with domestic and international partners to better prepare for and respond to the severe impact of various challenges. We therefore appreciate the close collaboration with UN agencies, including the UNDP in this regard. Such partnership will be key in driving our development pathway towards a more resilient and sustainable growth. And with that note, I wish you all a fruitful discussion today. Thank you.
Thank you, Ambassador, and thank you for sharing some of that data. I think across the room, it's interesting to note how low the insurance penetration is in Thailand. We'd like to go on to the next section of our program this morning. I would like to invite Laura Rosado, MIN Vice Chair and AXA Emerging Customers, to present the Landscape Report 2023 edition.
Good morning, everyone. Let me just make sure that I'm going to be able to change the... Perfect. Good morning, everyone. On behalf of the Microinsurance Network, I am very pleased to be here today to share with you the main highlights of the 2023 edition of the Landscape of Microinsurance. I hope this short time we have together will have generated enough motivation not only to download and read the report, but more importantly, that you help us spread the word of its relevance in supporting the design of policy and value propositions for low-income communities. I would like to start first with acknowledging our sponsors of this study, the Luxembourg Ministry of Foreign and European Affairs, Defense, Development Cooperation and Foreign Trade, as well as the Ministry of Finance, the UNDP's Insurance and Risk Finance Facility, AXA, Barents Re Reinsurance Company, Munich Re Foundation, Swiss Re Foundation, and the Aon Philippines, and the Insurance Federation of Egypt for their financial support and other contributions that have made this study possible. Her Excellencies couldn't have said it better than me, but I would still like to start by making the link between insurance and development. Uncertainty and risks are present in all areas of our lives, and our ability to cope with these uncertainties and their potential financial shocks derived from them is a direct measure of resilience. There are vast numbers that were mentioned here today. I will not repeat a lot of them, but I would highlight that around 2.8 billion people that are earning between $2 to $20 are at the highest vulnerability in the event of disasters, in the event of political unrest, and in the event of many other risks. So how are low-income communities and small businesses coping with risk? The latest Findex database found that in developing economies, interviewees highlighted that work and social networks as the most common sources of emergency money, even if they saw savings as more reliable. This is where insurance comes in, a much more efficient financial tool to manage risks and to allow people to use savings for their future instead of using it to cope with uncertainty. This has really been the driving conviction behind the landscape of microinsurance, to understand the critical role that microinsurance can have over development. And data gathering on a regular basis seems fundamental for informed decision-making. Compared to other financial inclusion products and services like access to bank accounts, credit, payments, there is still a large data gap on demand studies for insurance. Understanding the complexities of why this is, be it multiple insurance covers, low insurance literacy, is how the landscape of microinsurance came to be what it is today. A comprehensive study on the supply side of the market based on voluntary disclosure by microinsurance providers. Traction has been built on a yearly basis, and on the 2023 exercise, it increased its scope to cover over 36 countries in Asia and the Pacific, Africa, and Latin America and the Caribbean, and achieve a much larger participation to nearly 300 microinsurance providers sharing information on over 1,000 microinsurance products. Insurance supervisors and associations have been instrumental for data collection in over 20 of these countries, and we are reaching a 100% coverage of the insurance sector in several countries already, including Bangladesh, Cambodia, Colombia, Fiji Islands, India, Rwanda, and Zimbabwe. This study is the result of a collective effort involving experts within the microinsurance spaces and could not take place, as I said it before, without the precious support of our sponsors and donors. Now, moving into the results of the 2023 edition, the first big message concerns outreach. The study revealed that 330 million people were covered by microinsurance in the countries covered by the study, and this only represents 11.5% of the target population, the largest gap identified in Africa. For the insurance sector, this represents over $41 billion of premiums as an opportunity, of which only 15% of the market is currently being captured. While this hints at, on the good side of seeing the positive, it hints at growth in comparable terms versus the previous years, both in terms of insurance premiums and of people covered. There is still a long way to go. And it also, our interviews with different experts highlighted that stakeholders, public and private, should significantly increase the efforts to address this protection gap. Momentum has been created after the COVID-19 pandemic, as well as climate change concerns. However, there is now pressing need to translate into actions. There is still consensus that operating microinsurance at scale remains a top concern for the private sector, especially under a high inflation and political uncertainty climate. So what kind of insurance are we talking about when we say microinsurance? As you can imagine, there are as many insurance products as there could be risks. But to try to simplify our conversation today, we are highlighting 4 large categories that we think are of a lot of relevance. During the 2023 edition of the Landscape, life and accidents insurance, which includes, for example, credit-linked products, funeral insurance, and savings, reported the highest coverage of all products to date. And this higher coverage is in part driven by the nature of the products and how they are relatively easier to understand. Everybody knows that they're going to die at one point, but also because of their cost and because of the distribution channels used. You will also see a significant difference in coverage for the second category of products related to health, protecting 72 million people. When we consider that out-of-pocket expenses and derived additional costs from that a health event can have on low-income families, this just seems like a drop in the ocean. The majority of the products documented during the 2023 Landscape study provided lower benefits in case of hospitalization, and this is in part responding to huge affordability issues that more traditional private health insurance covers pose to low-income communities. This is where public and private collaboration can further enhance and address this significant protection gap. When we look at the protection of smallholder farmers, agricultural insurance rose to the 3rd place of products with highest people coverage, notably boosted by a public-private partnership in India, the PMFBY program, which alone covered over 28 million people. This public-private collaboration is one of the largest examples that exist of government-subsidized crop insurance cover in collaboration with the private sector and sheds a light on potential solutions for risks that might be too expensive for low-income communities to pay by themselves. In terms of climate risks, the 2023 edition of the Landscape highlighted that 116 million people had microinsurance coverage, mainly through agricultural products, but also embedded into property and life insurance products as well. This recognition of insurance as an essential tool for climate adaptation has increased and must continue. And global initiatives, such as the IDF and the Climate Risk Shield, focus on providing comprehensive financial protection against climate risks, highlighting the importance of cooperation, once again, between multiple actors. Finally, I would say that insurance uptake by these different product lines derive from multiple factors. On one hand, customer awareness, but also insurers' ability to explain the value of insurance to these communities. Trust is one of the biggest gaps when it comes to convincing people that insurance is a useful financial tool to manage income volatility. But it also depends on the channels chose to distribute this insurance, as some products might be easier to sell than others. Some risk remains less addressed by microinsurance providers, and for example, property, business protection, and income replacement are just few examples of them. However, these solutions are on the rise, as recorded by the different expert interviews that we have today, and this is where newcomers like insurtechs and new players can play an important factor in generating innovative solutions that precisely address this need for more innovation and new risk management solutions. Now, moving into access, one of the main challenges for insurance providers remains being distribution of insurance products. And what the study tells us for this year is that microfinance institutions were consolidated as the main distribution channel worldwide, followed by financial institutions as well as agents and brokers. In general terms, this not only reflects the higher experience from these sectors in insurance distribution, it also reflects that they already have the capillarity and presence with these lower income communities, which might come in handy when it comes to providing new financial solutions that can improve their lives. There is also, it's important to acknowledge as well that a lot of these players are also very present physically among these communities, and these physical networks remain key to microinsurance uptake. The reasons for this physical presence and the higher efficiency to protect communities can be multiple. On one hand, face-to-face interactions create trust among people that have never had insurance before. And on the other hand, there is an interest from these networks to monetize their customer base, and insurance becomes a core part of their product offer. There are still relevant regional differences, though, and in the case of Africa, agents and brokers dominate as the primary channel, especially for the distribution of funeral insurance, while in other areas, digital platforms and credit unions are becoming increasingly prominent. To address these distribution challenges, there is growing recognition of the need to align incentives with broad and more diverse players serving low-income communities. And although digital technology and adoption among these communities is growing, distribution through purely digital channels is not yet predominant. The success of alternative distribution channels in the insurance sector has been evidenced in models that effectively harmonize these incentives between the parties involved. An example of this is the creation of joint ventures, for example, between mobile network operators and insurers, allowing operators to share the success in insurance sales. We recorded an example among other 7 case studies documented in the Landscape report. This is the case of an insurtech company in Africa called Turaco, which leverages digitization to minimize costs of distribution and allowing for faster scale. Therefore, the incorporation of technology is essential in the evolution and efficiency of the provision of insurance services. But insurance shouldn't be judged, or microinsurance shouldn't be judged on a standalone basis. There is a very big dependency within the broader financial inclusion ecosystem. And in particular, premium collection remains a key barrier for insurance supply. The 2023 edition of the Landscape study revealed that cash is still widely used, even if direct debit has risen as the main payment methods. The fact that cash is still a very prevalent tool for claims collection just highlights how much frictions and inefficiencies might still exist in reaching lower income communities. This is especially the case for Asia and the Pacific, where cash continues to be the primary payment method, while in Africa and Latin America, direct payment debits are the norm. Mobile money and associated technologies have also proven effective in facilitating premium collection, as evidenced in Africa, where several examples of mobile money payments have been identified. Lack of money, distance to nearest financial institutions, and insufficient documentation to have financial identity were consistently cited by unbanked adults interviewed in the Findex database as some of the primary reasons for which they did not have a bank account. This really underscores the link between microinsurance uptake and overall financial inclusion. And there can be a virtuous circle in the usage of electronic payment methods for insurance payments as a way to continue fostering the growth of a cashless economy. There are other relevant payment methods, albeit much less documented, and they include payroll discount, so employee benefit programs where employees pay a part of that insurance coverage, Also, airtime was highlighted as a payment method for microinsurance in some countries, as well as bill deduction for insurance products embedded in other services. And then moving towards the end, we need to spend a moment just talking about claims disbursement, because it is a moment of truth for policyholders and beneficiaries. Unfortunately, information on both claims payouts and how long it takes for the payout to reach the insured is still to be increased, as 40% of the products reported did not contain this information in the report. However, for the data collected, microinsurance claims ratio remained at nearly 22% of premiums, with an encouraging 98% of claims acceptance ratio. This index has shown consistency compared to previous years and reflects an increase since the start of the pandemic. There are several variations in claims ratios driven by regional specificities, types of insurance, and distribution methods. But what we wanted to highlight here is that the older products have been in the market, the higher claims ratio they show. And this is likely because it takes time for people to first understand and want to buy new insurance products, but also understand how to claim. And this is where customer awareness at the moment of sale is critical to address this point, and this lies not only in distributors and insurance companies, but also in the role of the public sector on generating more or fostering an insurance culture. When it comes to operating indicators, we believe that the most critical one to bear in mind is the claims processing time. And it's an indicator that measures the time from the event to the moment the claims insurance payout is paid to beneficiaries. Why we think it is relevant? It is because this time of payment can make a big difference for low-income communities to avoid resorting to negative coping mechanisms like selling productive assets, taking kids out of school, among other very tragic measures. There are differences by region. Today, we wanted to highlight first the customer view, which it stood at 15 days on average, versus the insurer views, which is 10 days. This difference is important because it reflects how difficult it might be for customers to join all the required documentation to validly file a claim, and then for insurance companies to process and execute the payment. And in this front, technology once again can play an important role in documenting and in processing claims, ultimately shortening the time to reach customers. And distribution partners can also play a significant role in enabling document collection and payments processing. Finally, when it comes to the gender gap, the collection of gender data remained an unfinished business, with approximately 50% of insurers not reporting information. It is really difficult to draw conclusions about the gender gap, as the differences by region could be explained mostly by the distribution channels that are most prevalent. For example, we know that microfinance institutions have historically catered to women much better than the broader financial services sector. And if this was the most prevalent channel used by products in Asia, for example, this could explain the higher percentage of policyholders. However, to make better policy design and to rightly address the pain points limiting access to insurance for women, we need collective efforts to gather gender disaggregated data, and this is where public actors really come in incentivizing the private sector to take these measures. We were able to document a special collaboration between public and private actors, such as the Gender Equity Survey in Argentina, where they not only have developed gender disaggregated data collection tools, but they have also designed trainings and parameters so that the insurance sector can also take on this commitment to reducing the gender gap more clearly. And then finally, what to do, sorry, I clicked too fast. So what to do with the landscape now that it's out and it's 2023 edition. I just wanted to highlight some examples about how different stakeholders can use the information contained in the report. The strength lies, on one hand, on the participation of microinsurance providers, but also on the continuous usage of this data. Let me just offer a couple of examples. In the insurance supervisors and associations front, the landscape of microinsurance has significantly influenced regional market intelligence with data being incorporated into the Latin American Federation of Insurance Association. And this information has helped to clarify definitions and establish key indicators for microinsurance, highlighting opportunities to ensure the most vulnerable populations are covered with better products. And the expected impact of the landscape study on the insurance associations of Peru involves updating microinsurance norms with the support of the microinsurance network, which provided country-specific data for the country. This update, which is not yet published, is anticipated to integrate key learnings and enhance market intelligence by refining its definitions and indicators, as well as submitting and strengthening the collaboration with supervisors. Finally, for the non-for-profit sector, using insights from the landscape study, Fundación Profin supported an insurer in developing inclusive insurance products tailored to domestic workers, artisans, and university students in Bolivia. This initiative aims to bridge the significant gap in insurance demand and supply by educating and familiarizing these groups with the benefits and functions of insurance, enhancing their trust and uptake of these financial tools. And with this, I think we come to the end of the presentation. I invite you all to download the 2023 edition of the Landscape on their phones. The QR codes are available on your chairs, on the screen, and also on the screens outside. I would like to reinforce some of the key messages. Despite microinsurance being a critical tool for development, the majority of the population, nearly 90%, are still unprotected. Measurement leads to efficient decision-making and policy design. We need support to increase voluntary disclosure to strengthen the insights gathered by this yearly effort. The offers today remain concentrated in life and accidents cover, and demand and supply issues are at play, but broader diversity of insurance solutions for low-income communities is still needed. Distribution, premium collection, and claims payments are still critical operational challenges where collaboration with technology providers, insurtech, startups can play an important role to address this for more innovative models. And finally, lack of gender disaggregated data hinders informed value proposition design. With this, I take the opportunity to once again thank all the people that have been involved in delivering the 2023 edition of the Landscape of Microinsurance, and in particular to our donors, our sponsors, for your continued trust and support in making sure the study reaches the hand of a lot of stakeholders. Thanks a lot.
Thank you, Laura. As mentioned, you can download the report. The QR codes are around the room. Thank you for the speakers so far this morning. We're now going to go into the panel discussion. And for this, I would like to introduce Mr. Jan Kellett, the corporate and team leader of the Insurance and Risk Finance Facility of UNDP, as he comes up to introduce the panel as well as moderate the panel. Thank you, Jan.
Can I just check this is working? Yes, I pressed the button. Thank you so much. I would like to start by inviting my fellow panelists up. I want to make sure I'm going to get the titles correctly. So, can I ask, please, Sitara Merchant, who is the Chief Executive Officer of the Swiss Capacity Building Facility, if you could come and join me up here, please. We have Mr. Dirk Reinhardt, Vice Chair of the Munich Re Foundation. Where are you, Dirk? Mr. Dirk, okay. And we have online, we have Dr. Tarek Saif, Executive Director of the Egyptian Regulatory Authority. Tarek, do we have you online? I think we do see you. Could we just bring him to the fore? There we go, Tarek.
Welcome, everyone.
Tarek, could you just say a word to make sure we can hear you?
Just to thank you for inviting me, and I'm so sorry for not being physical with you.
No problem. I believe there was an unfortunate visa challenge there, but it's a pleasure to have you online.
Thank you.
Colleagues, just before we go to a few questions, I just wanted to add a few comments, if I may, in terms of partly on reflection to what we heard from our friends, the ambassadors, excellencies here, and also perhaps situate how we in UNDP value the landscape report and our partnership with the MIN. I think one of the things first to just to note is, as Laura has said, it is a public-private partnership of its own, involving both public sector in terms of funding side from the Luxembourg government, from ourselves and UNDP, and a set of private sector actors, and that is in itself commendable. In the space of insurance and risk financing, certainly from when we look at it, risk financing solutions, our partnership with industry is absolutely key. We're not an insurer, we can't hold risk. So if we are going to advocate for and look to build financing solutions, everything from the family and the farmer through to the sovereign and the nation state, we need to partner with industry and all kinds of industry along lines. So the partnership along with regard to the landscape report is one further piece of, if you like, of that puzzle. Just as a note for UNDP, why, in a sense, our theory of change of why we're engaged in risk transfer, financial resilience, insurance, risk financing is quite simple, which is we're looking to use risk transfer to sustain, protect, and to incentivize development. It is actually, in a sense, everything that we do is no more complicated than that. Of course, the programs, the initiatives themselves can be quite complex and involve many different actors and large amounts of money. But actually, at its centrality, there is nothing more complicated than that. And I noted that the different ambassadors, excellencies, commented on different aspects, for example, of development, different SDGs that insurance is capable of responding to. In fact, insurance really is sector agnostic. If you have something of value, you can, and there's a threat to it, and you can calculate how often that threat is going to happen, essentially you can create some kind of insurance solution. And I think that the different ambassadors talking about that is very relevant. Worthwhile noting, at least from our perspective, that the work of insurance and risk financing within development generally is still relatively new. Now, we do have some actors in the room here who have been working hard at this for about 20 years in their different institutions, but actually it's rather few. It is rather few. If you look at the Sustainable Development Goals themselves, they are rather ignorant of issues, even ignorant of issues of risk, and certainly ignorant to the role of risk financing and risk transfer to sustain development, to sustain investments in the SDGs of all type. It's not really very prevalent there. Many of the sort of institutions that we talk about a lot in this space, the Insurance Development Forum, that in UNDP side we co-founded and co-chair, the Ocean Risk and Resilience Action Alliance, the Insurance Resilience Global Partnership, these did not exist 10 years ago. Two of them were basically started in 2015, and then Aura 2019. These are essentially relatively new institutions. Our own work, the Insurance and Risk Finance Facility, essentially only started 5 years ago, and we launched 3 years ago. So that's UNDP, UN's development agency, charged with delivering development solutions with partners at the country level. We did not have a corporate dedicated team working in this space. So that is just worthy of noting that, it's still relatively new. I just want to, if I like, build a little bit on what Laura was saying about some of the statistics, because this is, I think, really key, just to maybe frame my panelists' comments, because I do think that there is a considerable crisis when you look at the issues of risk, finance, and development. which is how I am and we are looking at the role of the landscape report, which is essentially how we can use it to transform behavior and actually increase some of the rather poor statistics and the significant financial vulnerability that we see from many of our partner countries around the world. So last week, myself and Miguel and a few other colleagues from the facility, we were in Goa, where we had an event with about 20 different countries, actually co-hosted by our friends in the PMFBY, is that the right acronym? Which actually is the world's largest, I think it's the world's largest insurance agricultural program, 40 million people. India has done an amazing job on that program, and we co-hosted a large event there talking about agriculture insurance. So I'm just going to pick out some of the statistics, because when I look at these different statistics, which I'm going to roll out to you, very different from different places, the math does not add up. That's just follow me for a moment, indulge me if you may. So agriculture. So over the last 3 decades, our friends over at FAO, our dear friends, calculate conservatively that the world has lost $3.7 trillion in the agriculture sector alone due to drought, due to pests, due to cyclones, due to flooding, the kind of disasters which Laura put up there. $3.7 trillion over the last 30 years. We know, or our other sister agency, the WMO, World Meteorological Organization, released a report in December last year, saying that 4 out of every 5 African countries, that's continent of Africa, will not have their own sustainable water supply, water source by 2030, which is only 7 years away. The consequences of that are, I mean, we can imagine what that might be, I imagine. Data on insurance, this is sub-Saharan Africa. As I said, this is a collection of data from different sources, suggests that only 3% of smallholder farmers have insurance over over their work, their livelihoods, their agricultural product. The loss and damage fund currently stands at about $730 million. Just as a note, well, for example, that sounds like a lot of money, but let's just say, for example, put that in the context of Pakistan, one flooding event, $44 billion of damage, one fund designed to address the world's loss and damage issues, 700 million. There's a mismatch here. And then my final one, which colleagues, if you may, I did a little bit of back of an envelope calculation of how much the development sector, teams like my own, teams like Bush's, for example, World Bank and so on, how much we are actually financed to deliver the kind of solutions in line with these statistics. I calculate it as no more than about $500 million, stretched across all our work. It's a bit ad hoc. I did it myself, back of an envelope, if you like. But it's not a huge amount of money based on the statistics which I'm saying to you. So, colleagues, my friends on the panel, if I may, I don't know how you can take up both the landscape report and its results, plus, if you like, what I would argue is a rather substantially dire situation and a dire trajectory when we look at risk financing development. Maybe if you can kind of consider that as you move forward. And with that, I would like to commence with the questions. And I think I have the first question here for my friend Sitara. So, Sitara, this is the question to you. So you're the CEO of the Swiss Capacity Building Facility, which I imagine you might like to tell people what it is as well during your answer, because perhaps colleagues do not know. But this is the question to you. So how do you particularly assess the impact of capacity building in promoting inclusive insurance? How valuable has access to reliable data, noting what we know about the landscape report and its role, been in strengthening capacities in the area? And can you share any specific examples of projects that you have seen have contributed to greater access to inclusive insurance?
Sure, I'm happy to.
Thank you.
Thank you. Do I need, oh, it's on, okay. Hello, everyone. Pleasure to be here. So thank you for inviting me. Swiss Capacity Building Facility is a public-private partnership, so we're an association that actually brings together private sector and public sector. And we basically fund technical assistance, so the development of financial products for low-income populations. We also do have other instruments as well. Because we see the emergence of companies, so social enterprises or fintechs or insurtechs, we see them emerging, and they don't have the capital in the countries that they work in. And so we support them with returnable grants and or impact-linked finance. So that sort of just frames who we are. In terms of how do we measure impact, or how do we do it really simply. We look at what's the product that's being developed, how many new clients have actually accessed that product. And then we have other cascading measures like claims ratios, gender, so we break it down in terms of the data. But that's primarily what we look at. So it's really what is the practical implications of a product that's being developed in these countries. In terms of, I think you asked me about reliable data and the importance of it. I don't think we can say more than it's just paramount. Having data is paramount. When you look at who you're developing the product for, women, when you're looking at the risk assessments, the claims, when you even look at sort of the implementation. I mean, insurance, you're able to now have insurance because of remote sensing technologies. Lower costs of insurance are based on remote sensing technologies, particularly in index insurance for farmers, for example. So without it, you know, we can't move forward. When you look at index insurance, for example, again, you've got data that you need that is probably 10 years worth of weather data to be able to do index insurance. So it can't, you need it, and we have to have the systems in place, and that's why we have the report that we have here. In terms of examples, my favorite example is actually Blue Marble, and Jaime is here. I just noticed that he's here. And he can probably speak more about this than I can, but we're funding a project with them, which is coffee parametric insurance in Indonesia. So currently it's 2 regions, and the partners are Fairtrade, Nespresso, Nescafe, and Zurich, and it's an index insurance for drought and flood. And the cover will be in 2024 to 2025, we'll be looking at reaching 12,000 clients. And Blue Marble is working with the government to develop a national plan where they'll be the sole provider for crop insurance to expand across the country and cover 10 crops. So right now, just 1 crop, 10 crops. So when you think about the importance of sort of saying, okay, you've got a InsurTech that is funding today, that is sort of developing and scaling, we are able to support them, and they're able to test and show the value of the product that they're launching, and then their opportunity to work with government to be able to scale more broadly. And that's really our role and how we work within that public-private framework.
Thank you so much for, sorry, let me put that on. Thank you so much for that. Just as a note there, I mean, Jaime is here from Blue Marble. It is actually a relatively small community, a little bit of an incestuous community, if I dare to use that word, in the insurance and financing space when you look at public sector collaborations. We actually know each other. And that's maybe one of the things which is, perhaps that's an indicator that we are not quite as blossoming as we need to, because there are actually finally far too few of us working in this space trying to bring public-private partnerships together, which is the only way we can tackle issues of risk and financial vulnerability. So we're working with Jaime, I think, in Bangladesh and Pakistan, possibly one other country that eludes me. So, you know, how do we go beyond that, in a sense? So, next question, I'm going to go to Dr. Tariq here for this question. So, Dr. Tariq, for you, and also in this answer, maybe you could also just reflect on the landscape report and how you see it as well, because it's not quite in the question here, but I'd like to get you a little bit of, if you could sort of weave in a thought on that here. So this is the question to you, sir. As the Executive Director of the Egyptian Regulatory Authority, what is your assessment of the current regulatory environment in Egypt as it relates to inclusive insurance? If I'm not mistaken, talking about data, I think, for example, Egypt has a deficit of actuaries. For example, you don't have as many as you would require. I'm not mistaken that only 30 in the country. Perhaps that's part of the framework of your work. So, and what regulatory measures have been implemented to encourage greater access to insurance among underserved segments of your population? And what results have you observed so far?
Yeah.
Dr. Tariq, is that clear? Do I need to restate?
Yeah, thank you for the question, and thank you for the promotion. Actually, I'm not the director of the regulatory authority. I'm the director of in a financial institute in a regulatory authority. So thank you for the promotion.
No,
So about the question,
the invoice will be in the post.
you don't. There's a problem in my voice. Can you hear me?
No, we can hear you. Please proceed.
Yeah. Actually, for the actuaries, we have a shortage in actuaries in Egypt, and this is a big challenge for pricing and supporting microinsurance. But fortunately, the Financial Regulatory Authority with the Egyptian Insurance Federation, they took a very good action by having a protocol with the AUC, the American University in Cairo, to work on building capacity and graduate people and qualify people for as actuaries for the market. And also the Egyptian Insurance Federation dedicated a very huge fund to support people to continue studying in the American Association of Actuaries and in the institute. So I think we're targeting having about 200 actuaries in the market during the upcoming 5 years. Now in Egypt, there is about 40 actuaries, certified and licensed to work as an actuary. We have many graduated people, but they didn't complete their study to get the license. So we have 40 actuaries against 40 insurance companies. So this ratio is very satisfied for us, and we are working to develop. About the regulatory environment, fortunately, last week, the Egyptian Parliament ratified the new insurance law. We waited for this action actually for almost 5 years. So this new law has been ratified by the Parliament last week. The new law introduced a new license for microinsurance companies, a specialized company to write microinsurance business in the Egyptian market. I think this is a very, very important and enthusiastic step toward financial inclusion in Egypt. So now we will have specialized companies to underwrite and offer microinsurance products. And also this license is a composite license. So the company can work for life and non-life business as well, because in Egypt, it's not allowed for the conventional insurance companies, but it is allowed for the new microinsurance companies. So I think this is a very important step towards supporting the financial inclusion and developing the regulatory environment in Egypt. Also, FRA issued a new decree allows insurance companies to distribute microinsurance via the telecom companies and online stores. We have a very, very good, or let me say excellent technological infrastructure for e-payment. We have a lot of e-money wallets, mobile money. There is also an application developed by the Egyptian Egypt Post Authority, another one developed by the central bank to facilitate the e-payment for all classes in the community. Also, FRA issued a lot of decrees and regulation to support the microfinance. Microfinance actually is very crucial for microinsurance, because this is the main distribution channel for the time being to offer microinsurance products. We have many products in the market today through insurance companies, distributed through microfinance companies and through Egypt Post as well. There are many products under consideration for the breadwinner women to achieve the gender equality and accessibility, women accessibility to the financial system. And now in Egypt, there are 15 insurance companies offering microinsurance. There are 6.3 insured persons, and gross premium written for the microinsurance products in Egypt is about 8 million American dollar. All of this before the new law. As I said before, the new law is a big opportunity and will allow new companies to offer and to enter the market. So actually also in Egypt, we have the insurance gap is 100%. Why 100%? Because actually the insurance penetration in Egypt is 0.7, approximately 0.7 for insurance sector without private funds, insurance funds. This is versus 1.4 for the emerging markets in Europe, Africa, and the Middle East. So we have to double our insurance penetration to meet the benchmark of the emerging markets in Europe, Middle East, and Africa. So based on this, I can see that the insurance gap is 100%. Actually, I see this as a very good opportunity to develop microinsurance and to support the financial inclusion. Some people, they can say that it is negative, but from the other perspective, we can see it as an opportunity to develop more products and to develop more underwriting capacity in the market. In conclusion, more and more positive results are expected with the new law in Egypt. Thank you.
Thank you so much, Tarek, for that. I mean, a lot there that you were going over. Maybe just picking up the underlining thing is the critical role of government. So you mentioned about the legislation side of it, but also just the regulatory space, the role of technology, and providing the enabling environment, the foundations for the inclusive insurance industry to thrive. I think that's a very well taken point and a critical piece without which certainly we're not going to meet some of the challenges. This gives me a nice segue into the next question, because it's partly about challenges. So, Mr. Dirk Reinhardt, you've been working in this space for a little while, I believe. I'll let you answer that. That wasn't necessarily a question, but you can take it as a question. Given your experience, the work of the Munich Re Foundation, two real challenges in a sense. What have you seen as the major developments in the inclusive insurance space, over the last, say 5 to 10 years, in light of what we've heard, for example, in the Landscape report, and also what you see other sort of challenges in terms of growth? And if you want to weave in something about what the foundation does as well, I'm open to hearing that as well.
Thank you, Jan. Also, Dr. Tarek, welcome. Good to see you online, and welcome everyone here. First of all, I want to thank the team that's behind the study for doing this hard work to get all this data together, because that's really the fundamental why we're here now and why we can start discussing. Now, Jan, I am doing this since about 20 years, so the International Conference on Inclusive Insurance next October in Nepal will be the 20th conference, so I'm at this topic since quite some time. What is really good to see, and just beyond the study, when I hear the ambassador from Nigeria, ambassador from Thailand, ambassador from Luxembourg, someone like Achim Steiner talking about how many people do not have insurance, to say how important risk management is for sustainable economic development, that's already something we have achieved. That may not give any person an additional policy, but that is a start to go back to your government and say, there's something we need to do. Now, talking about the study, and I think that's fundamental, Tarek just gave a great example. He said, this is where Egypt stands, and this is where other countries stand. And I remember in Abuja about 10 years ago, we were presenting figures on Nigeria and on the region, and representatives from Nigeria stood up, oh, why we are so low compared to Ghana, compared to other countries. And this can give an incentive to really start promoting the work in inclusive insurance. And yes, you said the Insurance and Risk Finance Facility started about 5 years ago. It's good to see all these developments now coming up, and we have to be patient. The foundation has been founded by Munich Re at its 125th anniversary in 2005, and it took Munich Re 125 years to get where they were in 2005. So we have to be patient and don't expect to cover 80% of the target population in 10 years. We have new means here now. Talking about challenges, distribution, we heard about the challenge, but also the opportunities. How old is the iPhone? It's not even 15 years ago. It feels like it was always there, we can't live without it, but it gives us a unique opportunity which we didn't have 100 years ago. So there are a lot of tools now there. Now, coming back to what do I see from the landscape? I mean, we see more products, we see an increasing number of people covered from the countries that we cover, but we still see that the old-fashioned channels, microfinance organization, agents still play the major role, despite all the technology that we were talking about. I recommend to read Lorenz's book on experience with tablets, right? You say we need online solutions with an offline backup. So yes, all these tools are there, but do not forget about really the basics, which is how do our clients, our target clients work, how they live, what is their key demand. Now, again, on the challenges, climate risk is certainly one of the key challenges. Lorenzo just said this morning he has over 40 degrees in the Philippines. We in Munich, only 2 weeks ago, we had about 30 degrees, and we came from 2 degrees to 30 within 1 day. That's not normal. So climate risk is certainly one of the key challenges. At the same time, and now allow me to be a bit critical, there are lots of organizations coming up, like the IDF, like Insurance and Risk Finance Facility, like the Global Shield, which is great. But I would like to see a tripartite agreement on health, on education, on life. Because if you only focus on climate risk, it's like building a house from the roof. We need the fundamentals, education. We're going to organize the conference in Nepal. I was told there's only one actuary in Nepal. It's even more than in Egypt, less than in Egypt. So education, regulation, all these fundamentals we should not forget, because if we don't have the distribution channels there, it will be difficult to impossible to sell climate risk insurance as well as health, life, and so on. We spoke to farmers and cooperatives in Ghana after the conference in Ghana. They said, from agricultural cooperatives, they said, we need health insurance. I've been in Zambia 2 weeks ago. We spoke to farmers, and they said, the national program, which covers 1 million, is great, but no one wants to cover livestock. So listen to the clients, use all these tools that we now have. Certainly focus on climate risk, but please do not forget the fundamentals, and do not forget that. Turning off my microphone. Am I speaking too long?
No. Your microphone's still on. Your microphone was on. Okay, now it's on. Yeah.
There we go.
We're not censoring you, by the way, just to let you know.
But no, no.
So think about how to make a farmer resilient, which is with agriculture, but also if the person gets sick and doesn't have health insurance, then that farmer is not resilient. And most lower-income countries or emerging economies, or however you call them, depend on agricultural income. So make those resilient by looking at all the different risks. The data we have here can really help countries to look at where we stand and look at peer countries, but then they have to start working, but we will talk about that later.
Thank you, Dirk. Thank you, Dirk. If I may just reflect just before I'm going to go back to Sitara. So, actually, no, I'd say there is actually a direct connection between, for example, the things that leaders say and commit to and impact, even all the way down the line when it comes to financial protection. So that program, which Akim talked about, the tripartite agreement, which we launched in 2019 with the Insurance Development Forum, with the insurance actors active in Nigeria, very large, a $50 million policy on the risk financing side, for example, for Lagos State. That would not have happened probably if we hadn't managed to convince Akim to be the co-chair of the IDF and convinced him that he needed to make financial protection integrated into UNDP's strategic plan, which was totally non-existent beforehand, and, you know, brought the institution. So, I mean, I could do my own little part, but, you know, I'm not going to convince our regional directors, who are all, you know, at ASG level, to be able to commit to this, but he can. So I'd say there are some correlations about how leaders and our ability to, I think, convince leaders, both within governments, within industry. I think it's important, for example, that within the IDF, the steering committee is made up of CEOs and or chief financial officers from AXA, from SCOR, from Willis Towers Watson, from Howdens, etc. So that is, I think that's quite important, how those leaders and what they can do for us. Noting what you were saying about, you know, we should have other kinds of programs for other kinds of areas. I think that's definitely true. That, as I said, it is a question of resources. You know, if we had resources, we certainly could do more. So in the last 18 months, for example, on just the UNDP, and I imagine it's similar in other parts of the multilateral system, we had 43 countries or country offices come to us and ask us for support beyond the resources that we have. Some of them were on health. We don't actually do much in health yet. We are rolling out a challenge fund in 20 countries where I would imagine some of the insurtech solutions could be for health insurance, but certainly not at the scale that you're suggesting. Now, some parts of the UN family and multilaterals also have a little bit of a limitation, which is they're limited to work in specific areas. Sometimes the limitation comes from donors. If it's a climate policy team sitting in it and they want to give you 5 million, they want you to work on climate. And you have to manufacture a little bit how you could say, well, that's great, but how can we work on, say, resilience in areas that are affected by climate change? So, for example, our money from the German government for the tripartite comes from their climate policy team. But we have managed to essentially push them into saying it's not all about climate risk directly, it's about other things which are relevant in a zone affected by climate risk. So, bit of a complicated space, but just some reflections. What I'd like to do now, if I may, is come back to Sitara. I'm going to find the question for you now. Excuse me. Of course, now I have entirely lost the question. Chamisa, do we have another copy there? And now I found it. Sorry, excuse me for that hitch here. So this question, Sitara, is as follows, a little bit more tailored towards what you do in SCBF, if you like. So given your experience, how does SCBF work with public and private sector? We've already noted, all of us, essentially, how important that is. In relation to inclusive insurance, do you have some examples of collaboration that illustrate the importance of working together, maybe picking up on some of the things which we heard from Dirk in terms of areas which are underdeveloped, and maybe also from Tarek in terms of what governments are saying and working on in the regulatory space?
Thanks for that. I think, public and private partnerships are critical. I think everybody knows that. The key is, and if you think about, for example, in 2011, when SCBF first started, we had sort of the private sector on one side of the room and the public sector on the other side of the room. And that's the way it was. And it's slowly they're coming back together and actually having conversations. So I think the importance here is, and I go back to the example of Blue Marble, is really how the private sector can work at sort of a different scale and be able to, with the intention to scale larger, of course, but really to test ideas. And that's really important, because if you don't have the regulation that supports that, so if you think about sandboxes where insurance companies can test new approaches, they can actually start to scale and show the evidence that these are doable, then it's that collaboration that really makes it happen. So if you think about how do you, as a government leader, how do you start in this space? You could do sandboxes. I mean, you don't want to open up regulation right away. And so when you have that public-private partnership, you're able to bring that together. In the SCBF context, we really bring together, and this links to the discussion around health insurance. So we've been focusing on health insurance. That's one of our priority areas right now. And we're bringing together sort of pharma, and so if you think of the MSDs, the Roches of the world, bringing them together with AXA, for example, and other insurance companies to say, okay, how can we work together to actually develop a solution and then play it out in a country and see how it works. And again, there, when you talk about how does the regulation work, how do you actually allow that to happen, those are the things where we start to have those discussions. And when you look at private sector, they're really able to bring that innovation. They bring the innovation, they bring the expertise of sort of the commercial markets to these contexts. So I think it's really important to have that collaboration. In terms of example, we do have, for example, a project we recently approved, in addition to the Ibiza project, which was mentioned by the ambassador earlier. We've also funded the Ibiza, and that speaks to your point that we're all sort of funding similar projects. But we recently funded a project, it's with SEVA, the largest trade union of informal workers. And this is in India. And what they're doing is really looking to scale. So right now they're going to support 21,000 clients, and they plan to scale it to 80,000 clients. So these cooperatives are sort of really important, or informal trade unions are really important. And there we're funding index insurance that helps with both climate, so heat, and with rain, so extreme heat situations. And it allows these women to actually support their livelihoods in the times when they can't work, when it's too hot to work, or there's too much rainfall. So that would be the example that I would use. But I really think that coming back to the public-private, it's really those discussions that we need to bring together, the public and private sector, to leverage the skills that both have to be able to move the agenda forward.
Thank you so much, Sitara. So, I mean, just to pick up on a few things, if I may, from what you said, this idea of public-private partnership, what I'm taking here, particularly in the area of innovation, perhaps even de-risking.
Absolutely. Yeah.
By stripping away the risk from, say, how governments or even private sector themselves may invest in a particular area by allowing a space for innovation. That is something which I think is important and is, again, underinvested in when you look at the amount of resources we are collectively putting into the space. You also noted in this allows then perhaps greater private sector expertise to come in terms of developing financial solutions. And also, I mean, noted you about the trade unions, because I guess maybe that flags up one thing, which is that there are partners out there in countries, which sometimes we think it's the sort of traditional MFIs and you know, working with insurance sectors, but actually there's a lot of parts of countries which are looking at insurance as a solution or as a complement to existing areas of work. This allows me to segue quite nicely into the next question to Tarek. So Tarek, this is a question for you here relating to what you're doing now, but also some of your previous work representing the private sector. And the question is like this: from your perspective as regulator, how do you think the public and private sectors can collaborate more effectively to promote inclusive insurance in Egypt? What does that collaboration look like? And are there specific policies, regulatory policies, that could facilitate this collaboration as you sort of drive towards increasing inclusive insurance? As you said, that was part of your goal of the Financial Regulatory Authority.
Yeah, actually, so far we don't have any concrete experience in the Egyptian market about the partnership between public and the private sector for microinsurance. However, I can see some opportunities because again, the new law and even the current insurance or the old insurance law allow any entity in Egypt, either governmental or private, to establish a private insurance fund. And now in Egypt, we have about 680 funds. One of the good examples under establishing now is the Agriculture Takaful Fund. Takaful is the Arabic word means solidarity. The Agriculture Takaful Fund is a fund to support agriculture insurance established by the Agriculture Ministry in Egypt. And they put the article of association, and the fund expected to be operated soon. So I expect many partnership like this in the future, but so far, as I told you, we don't have another example. Also, the new insurance law has nothing to restrict establishing a mutual companies between public sector and the private sector to support microinsurance. I think there is announcement that the Egypt Post will establish a microinsurance company mutually with AXA Insurance. So it's a public and the private sector will work together to offer microinsurance products. That's it.
Thank you, Tarek. I mean, that's 3 times I forgot to press the button. That's bad.
That's okay.
Thank you so much, Tarek, for reflecting on how there's both a challenge and an opportunity within Egypt in terms of this collaborations. Colleagues and friends, we're running a little bit out of time, but I do want to give Dirk just a chance to reflect briefly, if I may, on the final question for the panel, which is, from your perspective, this follows the same theme, actually. How do you think the development of inclusive insurance is influencing decision-making of whatever sort, from whatever party, in both public and private sectors? And how is the data from the landscape, how is it currently, or how can it in the future influence decision-making?
I think the data is the basics to start to understand where a country stands. I hope it leads into a stakeholder discussion engagement approach. It leads into the development of national financial inclusion strategies. It leads into the development of a steering body that organizes this process. And the study all over again will tell you every year where you stand. I think that's important. I think the Philippines have done that, Zambia has done that, other countries have done that. I think those are role models, and we need these stakeholder engagement processes, these national strategies. I think that is one of the key elements to really promote inclusive insurance markets, and we need the national players. They are in the race, and they can win the race against fighting poverty, because people fall back into poverty after disasters all over again.
Okay, so noting really this is not, no one is going to be able to lift this and meet these challenges alone. It really has to be all of us. And there is a role for the microinsurance landscape report to provide us with the ammunition almost to be able to make that, and also provide the links across the different stakeholders. So I think we've come to an end there. I just want to ask my MC, are we still having some interventions from the floor as planned, or is that? Okay, so we had a couple of, one or two. So we had a couple of interventions requested from the floor. So I would just like to call upon those colleagues, if they are there. I think we have Lisa Morgan here from ILO. There, Lisa, so you're hiding there. So ILO, of course, being another one who's been working along in this space, the impact insurance facility, for example. It'd be great just for you to give a reflection in whichever direction you want to take it.
Brilliant, thank you.
It's on.
Is it on? Okay, great. Thank you so much. So yeah, I know in the interest of time I'm going to try and keep this brief, but just to say that I'm here, I'm very honored to be representing the ILO's Impact Insurance Facility, which for a long time was called the Microinsurance Innovation Facility. And I just wanted to start out by thanking the Microinsurance Network, because I think, you know, yes, we have, of course, we all work for our different organizations, but really I think this is a community, a very important community, working on a very important topic, and I don't think the boundaries between us are necessarily so important. I think we're all working together towards a common cause, and I've actually worked with many of you, and I know many of you in the room, but for those of you who I don't know, the Impact Insurance Facility, just to tell you a little bit about what we do, because I was asked to comment, we do a couple of really key important things. So capacity building is one of our key efforts that we do, and we run what is called the Impact Insurance Academy every year. And so we really encourage you, if you don't know about this or you want to find out more, please contact me. Education is so important in this space. So the capacity building work that we do is built on real-life innovation projects that we're involved in and research that we do. So it's every year we update it and we upgrade it, and this is really important because we want to try and help build markets across the world. Just a couple of things that we're doing at the moment that I think contribute to inclusive insurance. We're doing a very important study at the moment with the Generation Foundation looking at how to improve client value, and also how to also look at the barriers and solutions and promote the business case. So we're working very closely with the Microinsurance Network. Some very key findings will come up in the next 6 months. We've interviewed around 40 non-participating insurance companies to find out what the problem is and how can we get you involved. So please watch the space. We're also working very closely with some of the leading inclusive insurers to find out more about what works. So hopefully we'll get some more interesting stuff out there. But really just to say we need to continue working together because the challenges are immense, and we are a relatively small community. We need to work together, not just within this room, but also with other actors who are looking at risk management like social protection. At the ILO, we have access to a lot of these different groups looking at risk. So that's all from me. Thank you.
Thank you so much, Lisa, and the work of ILO. And that last comment you made about how insurance connects to many other things like social protection, even to things like climate policy, like NDCs, like NAPs, through into things like public financial management and how countries manage risk financially. I think there's a bigger ecosystem that we're connected to. Now we have, as a final contributor, I think, we have Jaime. Sorry, Jaime, I don't know how to pronounce your family name, so you're going to have to say it for everybody. Apologize. CEO of Blue Marble, who I've been referenced a few times, but if you'd like to say a few words.
No, thank you very much, and it's Delpines is the last name.
Delpines.
Yeah.
Thank you.
So Well, first of all, thank you very much for having me here, and I want to commend everyone involved in this study. I think it's an incredible effort, and on an annual basis, it gives us a context to learn from and understand the trends, and also, to your point, how, as an industry, things are, and a community, things are evolving. It's a massive challenge, but there's progress, and I think there's hope in that, and we're an actor in this space, so we're practitioners. We have a mission to provide access to insurance to underserved populations. We do this in 15 countries. And really what we're working on is enablers, enabling factors that, that help build these schemes. So we have a number of them, so partnerships with institutions like UNDP and the private sector. So we're working with many insurers, many brokers, many companies. There were mentions of Nestle as an example. And what we're trying to do in every country we work in is really stitch together an ecosystem with all these players to really, as a consortium, as a partnership of public and private players, to extend that access to insurance. That's really what's at the essence. And if anyone is interested in learning more, I'd be happy to get into more details. Thank you.
Thank you, Jaime, for that. And I think that brings us to the end of this panel. Can I just give a round of applause? Can I ask for a round of applause? Thank you so much, and I hand back to you, Shamiza.
Thank you. Thank you for that rich discussion. I would like to thank Dr. Tariq, who is online, Sitara, Dirk, and Jan. Thank you very much.
Thank you.
In the interest of time, we'd like to go straight into our next speaker. I would like to invite Sheila Beyankia, Head of Inclusive Insurance from ZEPRI, to talk about the practical lessons in building financial resilience on the ground. Sheila, if you'd like to make your way.
Good morning, ladies and gentlemen. All protocols observed. It's been an interesting and insightful conversation this morning. I would like to start by congratulating the Microinsurance Network, UNDP, and other partners on the launch of the 2023 report and the insights that you've shared that I'm sure will be very beneficial to all of us in this room and our colleagues who are addressing the big challenge that we saw presented going forward in as far as designing and developing solutions that are really addressing what's lacking and what's going to support inclusivity in the insurance space. Right. Before I start, my job is to share practical lessons on the ground, but I want to introduce ZEPRI. ZEPRI is an African reinsurance company. We've been around for 30 years now. We're set up by COMESA heads of government, COMESA being the common market for East and Southern Africa. Diverse shareholding. We are located in Nairobi as a headquarter. We have 8 country offices across the region, but we do business all over Africa. I'd like to point you to our mandate on the right, and specifically the first point, which is increasing insurance penetration and deepening financial inclusion. And what we're going to discuss today is going to reflect and share some examples of what we've been doing in this space. I addressed this regarding our footprint and our coverage, and just noting that we underwrite all sorts of business with also a leg into the inclusive side. And specifically, we set up the first full insurance in Africa, and I think that's a great achievement on this inclusive insurance agenda as well. So I'll take you through briefly on an overview of ZEPRI's impact initiatives. Again, recognizing, like we've seen in the report, insurance penetration remaining very low in Africa, following from the traditional classes of business at less than 2-3% in most of Africa. So ZEPRI, decided to champion as part of its mandate, like I mentioned earlier, and work on initiatives that will then increase agriculture penetration and inclusivity on insurance. So we have initiatives in agriculture and climate risk. I had mention of the project in Zambia, I'll speak to that as well, covering 1 million farmers. ZEPRI has participated in that. We've worked in agriculture projects in Uganda and Kenya. And speaking to the role of technology and innovation, ZEPRI acquired an insurtech, an agritech known as AXA Africa, Agriculture and Climate Risk Enterprise Africa. And I know it was one of the participants in the report 2023. So ZEPRI has been there. There's a project called Drive, talking about de-risking pastoralists in the Horn of Africa. I'm going to speak some more into that as part of the lesson, so I'll come to that at that point. But I think what is key is 56% women covered of this product. Again, speaking to gender, inclusivity, and the whole package. ZEPRI works with regulators. We can't overemphasize the role of working with regulators, creating an enabling environment to support inclusive insurance. And we have set up a forum where we engage with regulators of Eastern Africa. We've gotten the ones from Zambia, Malawi as well to join. And we sit down and share what are the new trends, what is happening in emerging markets, how can we work together to create an enabling environment to drive inclusive insurance. Of course, innovation and digitization, we've spoken about that. Required technologies and digital platforms, as well as partnerships. You don't have to acquire everything. How do you rally and ride on what's already existing and building on that for scale? The role of sensitization and capacity building, ZEPRI has put aside an academy. We do capacity building from technical insurance, working with regulators, working with now microfinance, the distribution channels. How do we get insurance in the mainstream? Because you'll agree with me, the microfinance industry has kind of moved ahead of us. And how do we work together to reach that level? We support regional trade in the COMESA region. You know, there's a lot of imports and coming across, say, from Kenya to Uganda to the landlocked countries, DRC and Congo. How do we use insurance to de-risk and facilitate trade? There's initiatives that ZEPRI is leading in that space. Long-term savings schemes, we spoke about the bulk of the people being in informal sector and insurance kind of dealing with, or banking dealing with people in informal sector. How do we bring in the informal sector and then incentivize them to save? And at the same time, how do we bundle an insurance facility or product onto that to encourage the saving culture, building resilience, so in case of a disaster, we are protected. And we've had a play as well, which is in affordable housing, and that's a key agenda item for most of our regional governments. And we've designed a solution called a collateral replacement indemnity that eliminates the need to put a down payment, you know, when you're getting a house for your first mortgage, targeting first home owners, affordable housing. And we can speak a little more to this, but we think it's a great invention and innovation, and that's working to bring in more people into, you know, the protected former space. Right. So I'll now move on to the issue of the day, which is what has been our experience on the ground. We've heard from the previous speakers, and you'll find that most of what I'm going to say is really going to be, I think I got the cheat code. I was speaking to Jan a few days ago, and he said I didn't have the cheat code. But having listened to the previous speakers, you're going to see it's really a similar conversation, what we've learned on the ground, what the report is bringing out, what we've heard from the honorable ambassadors. And I think we have the map set out for us. So I'll tell you about Drive Project. So Drive Project is, Drive stands for De-risking, Inclusion and Value Chain Enhancement for Pastoral Communities in the Horn of Africa. It's a World Bank funded project. It's been running for about 2 years. And the objective really is to enhance pastoralist access to financial services for drought risk mitigation and include them in value chains in the formal trading sector. It's running in Kenya, Ethiopia, Somalia, and Djibouti. 360 million supported by the World Bank and the participating countries. And then the GRIF as well, coming in to provide a grant. So ZEPRI is the implementer of Component 1, which is providing a package of financial services to support the provision of integrated package of, to build resilience against climate change. So it's a complete package, having a savings component, an insurance component, and also financial literacy, and ZEPRI is the implementer, the regional implementer of this program. There's also a part 2, which is the value chains and access to markets that's run by the ministries of each of the participating countries. So it's a partnership in itself. What have we learned in implementing DRIVE? So like everyone alluded here, these are problems that have been existing. These are problems that we've been working on. There was a project called Kenya Livestock Insurance Program. It's been running for several years. There was another pilot in Somalia. Many of these didn't scale, or they ran out after a certain time. And I just wanted to share some of the lessons that perhaps we can ponder on as a team in the inclusive space and see how this would support bringing more people into protection. What is unique about DRIVE is it's a regional project, and we think that has brought a lot of value. It brings scale. Of course, insurance is about diversification. You're going to have a drought in Kenya. It won't be as bad as it is in, say, Somalia or in Ethiopia, and that helps the product perform well. But there's also economies of scale in terms of designing the product, distribution, monitoring, lessons learned. A regional approach then, helps us borrow lessons from one market to another, cross-learn, cross-share, and bring in a lot of experience from across the geographies. We've also seen that it brings a lot of interest from the risk carriers, the international reinsurers. The wider the scale, it's quite an interesting way to look at this, and it would be one way to grow, and brings me into the next point. If we can add more countries, we had a lot of programs. How does DRIVE expand? We're already in Kenya, Uganda. How do we add Uganda? How do we add Tanzania? How do we add many of Sudan? The countries going through a similar kind of drought. The next thing we've done as well in DRIVE is looking at innovative distribution channels. The report speaks of distribution remaining a challenge. So what DRIVE did, we looked at pastoralists organizing groups. They're already organizing groups for some other commercial activity. They're productive. They already trust each other. How do you leverage that? And so this eliminates the need of the traditional agency model, which then also add costs and other complications. So I think that is one way we can look at it. I heard about the trading unions, people organize in such groups. How do we borrow these examples as we set out similar programs in the inclusive space? And again, they link to the fact that they're organized in groups allows linkage to the markets. It's much easier going as a group, organized, mobilized, as opposed to one individual moving around trying to access market. I can't overemphasize the role of public-private partnerships, and these have been very, very critical in this project, starting by our regional governments who have, set the tone and have made a commitment to support the pastoralists, putting our money aside, working with our development partners, World Bank and the others, public sector, knowledge sharing. Again, speaking to my point of building on existing programs, working with knowledge partners like the ILRI, who did some livestock research. What did they learn? CLIP, bringing all those in and trying to expand. We had to get data from Planet. It's a farm out of the US. Data. I think it's been very, very clear in this room, in the report, and previously that this is a key thing to take the step ahead. Leveraging existing programs, I've spoken to that. We've seen interest from other countries. How do we make it a reality? And using the existing platform, the existing ecosystem to build more and avoid duplication, and by so doing, increase reach and impact. Policy and regulatory support, very, very critical. The Dr. Tariq spoke about how it is in Egypt and supporting the players in space. It's been very critical for us on Drive. For instance, in Kenya, each company has to go and get a product approved individually. And in Drive, we've crowded in partners. It's an ecosystem approach. So each insurance company would have been expected to go and fill those forms, get an approval, but no. The regulators supported us, and ZEPRI, as the reinsurer, the implementer, got that approval. And so by the time we onboard an insurance company, there's no need for that. So you're able to very quickly hit the market and start making an impact where it is. Of course, customer experience, timely payouts, very, very key. We're not taking a back row on this. We're trying to be at the fore because we're selling trust. We're trying to get buy-in. Some of these solutions are not fully subsidized, but even if they were, you want people to, at the end of the program, sustainability. And one way of doing that is making the customer experience one worth having and showing the value of insurance. Capacity building and awareness, very, very critical. We've put systems in place in case there are grievances. How do they reach us? How do they reach partners? And of course, the ecosystem approach, bringing everyone into play. So these are some of the lessons we've seen on Drive project. And it targets livestock. So I'm going to take you to one that's about crop, but more or less similar lessons across. And it was spoken to quite a bit. That's the Farmers Input Support Program in Zambia, where ZEPRI has been participating since 2017 as a reinsurer, technical partner, advisor. It's a weather index program, supported by the government of Zambia. Again, what have we learned? Partnerships, and seeing people in this room today from diverse backgrounds just speaks to this. We need to engage as stakeholders. We need to build from our lessons, from learnings, and cross-share. And this has also been evident in the FISP program. We work with the World Food Program, GIZ. We're in a technical group. How do we keep improving the product? Do we go back and sit and say what's working, what's not working? There was speak of this crop, but I also want to protect the full individual. How do we work to add add-ons and rider products to, increase the resilience? That can only be done through partnerships for collaboration, enhancing data and technical capabilities, leveraging technology for distribution. You can imagine 1 million farmers, reaching them, that you can't just walk to them. You have to leverage tech to be able to do that. On our end, I talked about our investment in ACRE Africa, again, to augment capability in smallholder agriculture, protection and insurance, working with people like IFC and the Insurance Authority in Zambia to build capacity for industry players in the smallholder space and inclusion. And our academy does a lot of work around creating awareness generally. Insurance is not easily understood, and we have to make it easy, especially for the kind of the target that we are looking to getting with this inclusive finance. Just want to end with the customer experience being key. We've seen parametric solutions being quite good because of the ease of triggers and knowing it's time to pay out. You don't have to go through that whole process of documentation, validating, remote sensing technology being leveraged, because you want to ensure that you get stickiness, you get buy-in, and that people believe in the product like we do, right? In summary, I just want to conclude by just highlighting this. The benefits of a multilateral regional approach, bringing scale and diversity, right? The role of public-private partnerships, be it for knowledge sharing, premium financing, capacity building, speed of rollout. Can't overemphasize the role of regulatory support. Could be in terms of enabling environment, the right regulation to fit the microinsurance context, because what works for the conventional side doesn't necessarily work to foster inclusive insurance uptake. Capacity building and sensitization, creating awareness, enhancing digital capabilities, and I could add actuarial capability from what I've had today and what we know as a challenge really in the industry. Leveraging tech, you can't fight them, join them. And you shouldn't fight them anyway. You should be building an ecosystems on what's working and what's good. Similar to the MFIs, how can we leverage, how can we bundle? But without insurance taking a back seat, we need to be at the fore, we need to be bold, we need to be ubiquitous, the way microfinance is. I think we need to, and we're making the steps in the right direction, we're already there. And close by saying, enhance customer journey. Insurance is a promise. We must deliver on the promise if we want uptake, stickiness, and sustainability. Thank you very much, ladies and gentlemen.
Thank you, Sheila, for sharing those invaluable lessons from the ground. And I just want to say thank you very much for your patience. We are running a bit behind, but we're almost wrapping up. I would like to invite Lorenzo Chan, the MIN Chair and President, and the CEO of Pioneer Inc. I had an interesting discussion with Lorenzo just before we started, and he flew 14 hours to get here. So thank you for being with us, Lorenzo.
Well, thank you very much. And so in the interest of time, Your Excellency and honored guests and stragglers who have stayed on with us till the very end, we come now to the closing of today's event. And I find myself in that unique position where I stand between you and the lunch that you so deserve. It is a slot only second to speaking after lunch. Anyway, while the considerable potential of microinsurance to address global protection gap and contribute significantly to policy goals, public policy goals, is very evident, the truth is only a fraction of emerging customers and small-scale producers worldwide currently have any form of insurance. In other words, not enough of the people we need to reach out to have cover. This gap highlights a real need for governments to step up their efforts to address the gap, and a distinct opportunity for the insurance sector to take advantage of. Different parts of the world have witnessed the advancement of microfinance. Sheila just mentioned that. Still, the realization is really that setbacks happen each time an unforeseen event occurs, whether driven by illness, death, loss of income, calamity, or the effects of climate change. Now, we can all, there's a lot of people who still do not want to acknowledge the impact of climate. And that's fine, but we cannot not do anything about it. Without microinsurance in place, people normally reset to ground zero all over again each time something happens. So the role of microinsurance is not to address all the losses that are suffered, but rather to enable people to rebuild and resume their lives and livelihoods after what will now be temporary setbacks. This ability to bounce back without having to start from scratch or ground zero makes a world of difference. While insurance plays a role in building resilience, it cannot do so without appropriate public policy and regulation that enables accessible, affordable, and relevant insurance propositions. Public and private roles complement one another. We hear about that constantly, and that is true. A framework, therefore, to measure the progress of inclusive insurance is needed to create awareness and accountability. The Microinsurance Network is that nonprofit association of organizations and individuals who are committed and remain committed to building a world where people of all income levels are more resilient and less vulnerable to both daily and catastrophic risks by way of access to effective risk management tools, which includes insurance. One of the main strategic axes is knowledge sharing, and the essential flagship program is the Landscape of Microinsurance report. The flagship research continues to provide invaluable insights thanks to the support and participation of members, insurers, reinsurers, experts, and collaborators, supported by international organizations and government partners, several of whom you have heard from today. The network extends its appreciation for their foresight. I echo what Laura mentioned, and gratitude for the support and partnership. Now, while we find encouragement in the sense that there is uptake of inclusive insurance, and there are positive developments in some key indicators Laura showed, we must remain vigilant about the urgency, and there is urgency, to close the people protection gap. For the landscape to remain relevant, though, to the parties concerned, it must continue to generate relevant microinsurance data, the new gold data, or the new oil, and critical market knowledge. This data enables informed decision-making among insurers, policymakers, and development players. We look forward, therefore, to the continued support of governments. Observers note that countries where supervisors and associations promote the landscape during its data collection period, they actually enjoy higher participation rates and voluntary disclosures from insurers. It's almost like a confession of sorts, isn't it? To development and international agencies, promoting the use of data from the study contributes to relevant policy and intervention design. Now let's come down to what is at the bottom of it all. When you come down to it, all the necessary factors are present today. The market of billions is there, and the exposure to risks is there, which means the need for protection is present. It is established. Speaking now, the market of billions, though, must gain a greater awareness of what insurance can bring to them. So speaking now with my practitioner hat, I do not believe there is a scarcity of insurers. There is rather, instead, a shortage of those who are willing to look beyond the traditional business case by learning more about the micro market, what it needs, what it can afford, and how it can be enabled. Policymakers and regulators must continue the path of enabling the industry to do more for the market it serves, especially when it comes to claims settlement. Pay claims, pay claims, pay claims. The low-income sector has little resources. They cannot afford to wait. Many live hand-to-mouth and hence need claim payouts soonest if they can restart. Not of that 10 days, 15 days. By playing to their strengths and investing in inclusive insurance, insurers contribute to long-term development and stability of emerging markets because they build resiliency, support economic stability, and close the protection gap. For as long as I can remember, the industry's target market has always been limited to those who can afford it rather than those who need it most. Guys and gals, don't you think it's about time we joined the 294 providers in the study and serve both? Thank you very much. You've earned your lunch.
Thank you, Lorenzo. With that, I would like to just thank all the speakers, ambassadors, and participants online. We had 136 participants online. So thank you for joining us. Just a reminder that there are QR codes that have more information on UNDP IRFF, the MIN, and of course, you can download the report. Thank you very much for joining us this morning. And I would like to thank AmBest for sponsoring this lunch that we're about to enjoy. Thank you, everyone, for joining this rich discussion this morning. Thank you.